Good morning, good afternoon, good day. Welcome to my live market meeting, 9th September 2020. Hello, Rick. I hope you can hear me and see my screen. I will continue. I am Sagar Nandi. Thank you. I used to work in IT. I have retired now. I am swing trading using the Q trading systems and techniques. This is my traders forum, sagarnandi.com. My email ID tradingprofitably@gmail.com, YouTube channel Trading Profitably, and Twitter page Sagar Nandi. I regularly share live market and stock analysis on these channels. They are open to the public and you are most welcome to make use of them. Disclaimer: I am not an investment advisor. This demonstration is for educational purposes only. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. This is a live system. I have not prepared for it. Together we look at the market using the Q systems. These are the Q systems I use. Q Elite running on TradeStation and Q Global Q Finder running on MetaStock. I use this for technical analysis, charting and scanning. Q Vital for fundamental and peer analysis. Q Edge for sector industry rotation analysis, and Q Index for market level index analysis. That was the last slide of the presentation. Let's start with the global markets. Australia market, that was inside a range. It is still inside a range, but it broke below the memory trend line support today. If it can continue to go down, we may consider it as a confirmed breakout. The way I prefer is if it goes down little bit and then retraces back to the lower edge of the sideways range and then goes down again. Then I will have a low risk go with flow shorting opportunity. That is my preferred opportunity to short than to try to short at the breakout point, because the breakout point may not give a low risk shorting opportunity. And also sometimes breakouts are fake breakouts. It may look like breaking out and next day it may go back up. The weekly here is magenta now for 2 weeks. That is bearish. Therefore, if AXJO continues to fall down, that may give shorting opportunity in the Australia market. Japanese index topics. And for the global indices, I am using Q Global running on MetaStrategy. Topics is also inside a range. At the upper edge, it is bound by watermark resistance, and lower end, it is bound by memory support. If you remember several weeks ago, when this bear release signal came, then I mentioned that I would not mind shorting it, maybe not topics, but some of the fundamentally weak stocks inside topics. I would not mind shorting at that point because we had a bear release signal at the upper edge of a range. That was the optimal time to short it. And if one shorted at that time, one would have reasonable profit in the trade. One way to trade the reversal setups like box setup or using the bear release signal at the upper edge, one way to trade it in the bearish direction is to use short call vertical, because it is not a trend following trade. Short call vertical may be more appropriate, like in this case. Why? Because the lower edge was not very far and it moved sideways, still inside a range. If we just shorted using topics, then the profit would not be much. It would still have profit, but not so much. But if we shorted using short call vertical, then time decay would be in our favor, and that trade would give significant profit. Am I going to short it now? No, because it has daily memory support and weekly memory support. It is continuing to be inside the range. China market, CSI 300 index. Somewhat like the Australian market, it was inside a range and it seems to be dropping below the range. Again, I prefer it to retrace and then go down again, giving me a low risk go with flow shorting opportunity. I would not like to take a breakout kind of short trade right now. Here also, like in the case of Australian market, the backdrop color is magenta. That is bearish. Australia, Japan, China all were sideways, maybe breaking down for Australia and China now. And the India market, Nifty 50 index, that was in an uptrend. This week it seems to be breaking below the weekly memory support. In daily, there was a large bearish reversal candle that also showed bearish pressure and bear release signal. After that, it tried to go up for 3 days and then came down again. At that time, one might not short looking at the nearby weekly memory support. Now it has fallen for several days in the daily chart. Again, if I am looking for a shorting opportunity, then I will prefer for it to retrace up little bit and then come down again, giving a proper go with flow shorting opportunity. This was the only global market that was in an uptrend, and that is also weakening. The FTSE market, the UK market FTSE index was also in a sideways range. This is continuing in a sideways range. This is what I was mentioning. Breakouts are not safe often because they tend to be fake breakouts. Like in this case, price went back inside the range. That happened earlier here. I mentioned it in the previous webinar. It tried to break below watermark support on the red candle and reversed the very next candle. The same thing happened here. The red candle closed below the range. Very next candle reversed with bull release signal, and at the right edge it is happening again. There is a memory resistance line. If it reverses from that memory resistance line, then I will be more comfortable taking a short trade. However, the weekly has turned cyan now. Therefore, even if the daily turns down from the memory resistance, it will not give a proper go with flow short setup. If I am still going to short, I may have to use the intraday fine-tune chart to look for lower risk shorting opportunity. Right now, we have to say it is back inside the range, therefore it is continuing to move sideways. Let's look at oil and gold also before looking at the USA market. Oil ETF USO. It was inside a very narrow range, and I kept on mentioning that until it breaks out, I'm not going to try any directional trade. Now it has broken. out to the downside. What will I prefer now? For it to retrace little bit and come down again. That will give a low risk shorting opportunity. Right now, after breakout, I don't have a low risk shorting opportunity. Therefore, I will not try to short USO now. And because the weekly, daily, both colors are bearish, I'm not certainly going to take a bullish trade in oil. And gold, GLD, the ETF, it is moving inside a range. In the daily, it has memory support and resistance. It is at the lower edge of the range. However, the resistance is not very far. Therefore, using daily, weekly, I'm not going to try any swing trade. Traffic light color in daily and backdrop color in weekly, both are bearish. However, it has dropped for several days. Therefore, it is not going to give any low risk shorting opportunity right now. If it goes up because of the memory resistance, I will not be able to take any long trade right now. That was a review of the global markets and the two commodities. Let's now look at the USA market. For that, I will use Q Elite on TradeStation. S&P 500 ETF, SPY. 1 week ago, it had a neutral candle, and this week it is continuing to drop. If this week closes below the watermark resistance, that will create a false upside breakout that will be bearish. And the watermark was created by a bearish headwind signal. Therefore, if price drops, it has a potential to drop significantly. We have to see if the false breakout is confirmed. Is there any low risk shorting opportunity now? No, because price dropped sharply for 3 days. Now the stop is far away. If we look at the daily chart, technically we may say it is still in an uptrend. It doesn't have lower high, lower low. It is not in a downtrend. Technically, it is still in a uptrend, though it dropped sharply for 3 days. I will be happier for it to retrace little bit and come down again if I am looking for shorting opportunity. That will give proper low risk with flow short setup. Right now, it is risky to short and there is not enough bullish force to take a long trade. QQQ, similar picture. The weekly turned bearish both in color and in shape. Daily dropped sharply for 3 days. However, technically it is still in an uptrend. Too late to short and there is not enough bullish signal to take a long. Dia, same picture. In addition, there is a memory support line. Even less reason to try to take a short trade now. Russell 2000 ETF, IWM. When the market was weak last few days, I took some day trades, and because IWM was the only one that had memory resistance, I used IWM for the day trades. And I booked the day trades, closed it already. I had put options, I closed it already. I closed it when price was recovering on this day. That created a long lower tail. After that, price dropped again, but I didn't initiate any new day trade. There is no Q short swing trade setup. Once again, if price goes up, It will be very nice if it goes up to the memory resistance and drops again. Then using fine tune, we may look for extremely low risk shorting opportunity. If you are using fine tune chart when price comes to this memory resistance, you may use put options or you may also use short call vertical. All the market ETFs are looking weak. However, they are still in an uptrend. It is not in a downtrend and too late to short in my view. What about sectors? Q edge, the home is showing a lot of bearish color. Yesterday was very bearish. All the sectors were down. 91% of industries and 86% of stocks were down. Now, today's graph is also bearish. 5-day is also bearish. And even 10-day and 1 month, they have also turned bearish. This is a very bearish picture. Maybe it is a bit too oversold to try to take short trades now. There may not be easy shorting opportunities. If we look at Vital, let me open not Vital, Finder. This is Finder Weekly that shows the balance of bears and bulls across all the Q signals. This is the weekly Finder, very bearish all across the board. Very large number of bearish flow and very large number of bearish breakout. Even gap. The bullish bars are very, very small compared to the bearish bars. This picture is very bearish. In a long time, we didn't see such a bearish picture on the weekly interval for Finder. And the daily interval is also bearish in all the categories except reversal signals. Interestingly, yesterday the reversal signals were more balanced. Therefore, if we were going to look for a buy setup yesterday, then we would look for reversal setups like stocks that were touching memory support or bouncing up from there or gave a headwind setup. Yesterday would be probably a bit too late to try to short. We could look for buying opportunities. The ETFs, the sectors and finders all are showing that market is weak, but not yet in a downtrend. Weak, but maybe oversold. If we look at the market futures, let's look at one of them, E-mini S&P 500 futures. The futures were up earlier. It is still up. The last candle is overnight market, pre-market price movement. It opened lower, opened at the base of the body. Then it has a lower tail. Therefore, price tried to go even more down, but then recovered quite sharply. Now it is above yesterday's close. It's up by about 30 points plus. Future seems to be reversing. In this market, what kind of stocks to trade? I took one position yesterday in a stock that I analyzed earlier. Nikola. I shared it on my traders forum 1 month ago. That time I explained it is not a Q360 degrees trade. It is a trade in a stock based on a story on their promise. They seem to have great technology. When I shared it 1 month ago, I showed that the industry was improving both percentage and score. Q Edge scorecard also showed the same picture. Right on that day, 10th August, 1 month ago, the industry score was cyan, bullish. It was not a fundamental story. On that day, it went up by 20%. That was a very large move. And Q Vital also showed that it was steadily going up. It had a short squeeze potential. And at that time, it broke out of the memory resistance after displaying a bullish headwind signal in the daily chart. That was a breakout setup. Breakout with very high volume. And yesterday, I think yesterday, let's check it out. NKLA. Yes, yesterday. Yesterday, it broke out again. The first time that I shared it was on 10th August. So first time I shared it on this day as a breakout candidate. It was to be a long term, longer term, at least long or longer term holding trade. That was also a breakout setup that I shared, and yesterday I shared it again as a breakout setup. In the overnight market, it is up again by 3%. Yesterday, I traded it using the fine-tune chart. Let me change the chart template to fine-tune. There was a very positive news yesterday. By the way, the first time when I shared it 1 month ago, that time also there was a positive news that they had a huge order, farm order from a trucking company. That time it went up by 20% plus, and yesterday it went up by, let's check out, NKLA, 40%. Yesterday it went up by 40%. We can see that from Sonar. It had a gap up open of 29%, and it went up further by 11.4, closing 40.8% higher. It had a breakout. We saw that from the daily chart. It had a bull release signal, bullish flow, high pressure, extreme high activity. Now it is in an uptrend above both yellow and white direction lines. Here I am looking at the 10-minute chart. Let me do two things. One is change to 5-minute chart. That is my preferred interval in the morning session, and time frame, let me use regular sessions. In overnight market, if I open a stock, sometimes I like to see the pre and post market, but for trading purpose, I don't use the pre or post market movement. I just use the regular session. So yesterday I knew about the news when the stock opened here with a large gap up. Then it pulled back little bit. It was giving a breakout setup on the daily chart. Therefore, I was not going to take any bearish trade. There was no bull release signal at the lower edge. Therefore, I couldn't take any stretch signal long opportunity at the early range low. Instead, when it went above the early range high, I took a long position And in this case, I shorted the put. I shorted the put. My strike was around 44, around the early range low. And during the day, I already had 50% profit. One approach is to close a short naked put position once the profit is hitting 50%. I didn't do that. I am holding on to it, but today I may close the position, short put position and book profit. If I want, I may use part of the profit to buy a call, longer term call. By the way, the put I shorted was expiring only after 10 days. Therefore, I was quite comfortable that it will give significant profit because expiring very fast. If it gives me 50% or more profit today, I'm going to close it and I may use part of the profit to buy longer term call or longer term call vertical, part of the profit. That way I will have a position in Nikola on the long side. However, I'll have no risk because I would be using part of the profit. This is not a typical Q360 degrees trade, and I usually don't hold instruments long term. Even if I think of holding it longer term, I tend to close it whenever it gives me good profit and starts to come down. What is an example of that? That is SYN. It was a penny stock. Usually I don't discuss. However, I did share this on my forum. I shared it on this day, and I mentioned earlier that I took a long position when it came to the white direction line and created 3 successive indecisive candles. Somewhere here I booked profit. I had pretty large profit in terms of percentage, assuming that I entered it in the middle of that candle. I had 20% plus profit. So I exited the trade. However, I was still thinking of holding a position in this stock, SYN. It's a penny stock, but it seems to be going up. There is still this weekly memory support. Now in the daily, it is inside a triangle at the lower edge of the triangle. And though market was coming down sharply yesterday, if you look at the intraday chart, this is yesterday's chart. It opened here, then it didn't come down. It gradually moved up and near the closing, it sharply went up. Then it pulled back again, but it's still close to its significant percentage gain. SYN, we can find that out, 3%. Considering the fact that the market was down, it was up by 3%. It actually from open, it went up by 6.6%, closed up by 3%. Therefore, initially it opened lower. Initially it opened lower, but then closed higher. So yesterday using fine-tuned chart, I took a position in SYN again. That is how I mentioned in the last webinar that was organized by Dr. Jeffrey. I explained that my money tends to work many times in a year. Instead of holding on to SYN, I exited it with 20% plus profit and I bought it back at a lower price point near the memory support. And the fundamentals were good when I first bought it. Let's check that out. This is a biotech. The industry might not be strong yesterday. All the Sectors were down yesterday for several days actually. That is fine. I was already tracking the stock. When you track a stock and you have traded it once, you have booked profit and you are waiting for it to pull back to buy at a lower price, then you have much more confidence to buy it. And you know you have already booked some profit. Even if you take a loss, hopefully a smaller loss, it will not worry you so much. By tracking the stock, you tend to understand it more. And yes, it was undervalued with earnings growth and a short squeeze potential. So I knew about that because I traded it earlier. So I took a position again yesterday. What other stock did I buy yesterday? I bought another stock yesterday. Let me show how I found that stock. Because yesterday market was down, and as I mentioned, I was thinking it was down too much to take a short trade. It might be too late. So I was looking for buying opportunity, but in industries that would not be so risky. Nikola was a special case. It was not about the industry, it was about the news that General Motors invested in that company. SYN was a biotech, and earlier I remember I checked it out. Apparently, insiders are also buying. That was not my reason for buying, but I had a profit and I again bought it back at a lower price. And the other stock, the third stock I bought yesterday, and isn't it amazing? When the market was bearish, I was buying. And if you followed my posts, and I explained in the last few webinars also, I shorted many stocks when everybody was bullish. When everybody turned bearish, I booked profit in them. And when they were bearish, I started taking longs. That is how, using Q systems, I tend to be a little bit ahead of others and pretty high success rate, you may say. I explained in the last video, at least 70% success rate. I think that is quite good for short-term trading. Now, how did I find the other stock? Nikola was based on news. SYN, because I was tracking it. The third stock that I bought yesterday, I found it from Vita. Because the market was bearish, I was thinking of buying lower price stocks. So I have two stock universe that I use. One is mid price stocks, one is low price stocks. Both are liquid stocks. So I looked at the fundamentals of the low price stocks. Just by clicking a button, I could get the list to the home page and led Vital to the scorecard calculation. It has 959 stocks. Let's give it a few seconds. Okay, done. Then I looked at the scorecard and as you know, I first tried to look for 3-star candidates. Green color. Several stocks went up yesterday from this list, though the market was down. And one of the stocks that I saw yesterday, and I was doing this analysis using real-time systems, OPK. Let's look at OPK. This stock pulled back a lot from the peak. Low price stock, it hit 6.5 and then came down to 3. In the weekly, it came to yellow direction line. In the daily, it came to white direction line, and also multiple memory supports. In fact, one day earlier, it created a bullish shape candle that reversed from the two memory support lines. We could be ready by looking at that, and then we could take the position yesterday. I didn't notice the reversal one day earlier. I found it from Q Vital, the star fundamental stocks of the low price stocks list that I have. That is how I found OPK, and I took a long position in this low price stocks, considering that it is now having support at white direction line and also multiple memory support line, and that it had a bull release signal. Not very high activity, but high activity. High activity bars are thick bars. Very or extreme high would have a dot on the bar. That was not there. Dot was not there. However, the line was thick. This activity bar line was thick. Therefore, I know it was higher activity. And considering the fact that the market was down and it went up, I thought it is okay to buy, especially because the stop loss is very narrow. Of course, I checked the industry also. Let's check its industry using QH. It improved little bit over 5 days. The score is very magenta. Over 2 days, it improved. Over one day, it is even better. There is some acceleration over 2 days. However, I didn't buy it based on industry strength in this case. I bought it as a low price biotech, which has excellent valuation. Biotech sometimes don't have earnings growth, but this has excellent earnings growth and increasing earnings growth for the 3 quarters. Significant earnings growth for the 3 quarters, and for the last yearly period also it has large earnings growth. Revenue growth is also there for the last year. So fundamentals looked good with a short squeeze potential. It went up by 4.9% yesterday. It had excellent support on the technical charts, and I took a long position yesterday. Yesterday, when others were still deciding what to do, probably some people were thinking of shorting, I ended up buying 3 stocks. I didn't short anything yesterday. Not anything that I am still holding. Am I still holding some shorts? Yes. And I shared that trade earlier. Many of the shorts I closed completely. Why did I close them? Because they all started to have long lower tail, and very important, and they all hit my initial profit target. So I didn't want to erode my profit, but one stock didn't have long lower tail. Therefore, I am holding a partial position in it, that is PBI. And let's review it. I initially shared it 13 days ago. Not many people were bearish at that time. The industry was weaker. I, in fact, analyzed on this day and entered next day using fine-tuned chart. My analysis color was very magenta. So I decided based on the 1 day color, that is, I decided based on analysis that I did after market close. The industry was weak. It had negative earnings growth. Undervalued stock, but negative earnings growth that allowed me to short. And I used the bearish headwind in the daily chart and the yellow weekly backdrop color to take a headwind reversal short trade. There is another post in the forum earlier when I suggested buying the stock at this point. I bought it at that point, booked profit along the way when it went up. I bought it right at the time it could be bought, and I shorted again at the time it could be shorted. I used the headwind short signal, and as I explained, I did my analysis after market close. I entered the short next trading day, and I was hoping at that time that price will come down to cover at least the risk distance. And how is PBI now? Let's check on QLE. This was my short signal day. My entry was next day. Since then, it is continuing to come down. As you can see, there is no long lower tail. I booked partial profit already. I don't want to worry about holding a position where I have profit already. I booked my partial profit and I am holding partial position. I traded it with short stock position. So I am continuing to hold partial position. I have set an alert that if it hits the next memory support, then I may book profit in the remaining position without waiting. Wouldn't that be nice? I bought here, it went up, and if it hits the memory support, then it will come back to the same position from where it started. In any case, even if it doesn't, even if it goes up now, I'll end up with a significant profit in the trade. Now let's look at some stocks that we may consider buying today if the market goes up. I wrote it down somewhere. Let me find out. V4. Let's look at that. VIVO. This has a pattern similar to the other stock that I traded. Was it OPK? Yes. See, OPK pulled back a lot, came to the weekly yellow direction line, daily white direction line. And if you see V4, a very similar picture. In this case, both the weekly and daily went below the respective direction lines. However, daily displayed a bullish headwind several days ago. Since then, price is not able to go down. Last 2 days, market came down, but this stock is continuing to go up. Yesterday, it had very high, not very high, no dot, high activity, high bullish activity. It seems that this is ready to go up. It pulled back a lot. Even if it goes up a little bit up to the yellow direction line, that will cover the risk distance. This is no standard Q trade setup, not a headwind setup because headwind setup had to be applied on this day. Not a box setup, not a perfect box setup, but almost a box setup. Why not a perfect one? Because there is no very high activity, there is no pressure, and also the weekly is not yellow. So several checklist conditions are not met. Still, we have a watermark support level, a bullish headwind signal, bull release signal, bullish shape candle followed by another bullish shape candle and high activity. And again, all my trades have one thing in common, the stop loss is narrow. I will be happier if today during the day it pulls back little bit and then goes up again. That will give me a lower risk buying opportunity using fine tune chart. But I need to look at its fundamentals also. Let's check that out. In terms of industry, I think industry will be down. Almost all the industries were down yesterday. At least it is in a defensive sector. If we want to check the industry, why don't we do that? Healthcare supplies. The relative score is pretty strong relative score. It was magenta earlier. Now it has strengthened a lot. It is one of the strongest yesterday and over last 2 days. But if we look at the industry percentage, as expected, it is down. However, not so down as it was earlier. That is also showing on this specific stocks chart. It stopped going down and stabilizing. It had a bullish headwind signal. Because of the market sharp drop for 3 days, I didn't expect the percentage to be up. However, relatively, its score is pretty strong. And fundamentally, it is a star candidate. Excellent valuation, excellent earnings growth, accelerating earnings growth, short squeeze potential. Therefore, I may not mind taking a position in this stock. And if I look at the peer stocks and look for other star candidates, you see none of the other star candidates fundamentally strong in terms of both earnings growth valuation. None of the other star candidates went up. What about other trade candidates? That is stocks that are strong either in terms of valuation or earnings growth. Let's sort by price. Two stocks went up by about 2 or more percentage. Let's look at them. NVCR and HAE. NVCR has excellent earnings growth and HAE is undervalued. Two are strong for different reasons. NVCR has great earnings growth in successive quarters, overvalued, and HAE is undervalued but has negative earnings growth in the last quarter. Let's look at both of them, NVCR and HAE. NVCR, it is already up. Yesterday had a, you may say, a bullish candle, though it has an upper tail. It tried to go down and reverse sharply. Overall, we have to say it is bullish. However, the stop will be very far and it is close to the upper boundary. This is not my kind of trade. If we look at HAE, this is the stock I like. The weekly turned cyan 4 weeks ago, and for all the 3 weeks after that, it is having bullish shape, bullish color. In the daily, it broke above memory resistance yesterday, outperforming the market shown by relative performance, had a reversal candle. That is also important. Bullish flow, bullish shape, and breaking out. When a stock is moving inside a triangle and breaking out, I may buy it without high activity or pressure, as is in this case. Therefore, we found two stocks in the same industry. Let's look at them side by side in terms of fundamentals. Let me refresh the data. Vivo was the original stock and then HAE. I'm clicking the scissor to eliminate the other stocks. Focus on them. Vivo and HAE both has excellent valuation. Vivo has great earnings growth. HAE doesn't have so nice earnings growth. Vivo has excellent revenue growth also over the last quarter. HAE doesn't have. HAE has better earnings quality. Vivo has a short squeeze potential. Vivo went up by larger percentage over 2 days and 1 day. HAE also went up, considering the fact that the market was down for these 2 days, last 2 days. Both of these are possible buys. Let's look at them once again side by side. This is HAE. Let me change this side to Vivo. Let's look at the daily side by side. Sometimes it helps. And I have to change the template to daily using hotkeys Control Shift A. Now, if I look at the two stocks side by side, though fundamentally Vivo is better, technically HAE is looking better. A breakout from a memory resistance is a better buying signal than a stock like Vivo that is still in a downtrend. HAE was sideways and now it is breaking out. Vivo was in a downtrend. The bullish headwind is there, but technically on the weekly interval, we don't know. Let's look at the weekly also. Control Shift B. Here also HAE is stronger because it has turned cyan for several weeks. Vivo has not turned cyan yet. Though I think both are buyable. If you want to buy the stronger stock, then HAE is the stronger stock. Though fundamentally, Vivo is stronger. If you have two stocks in the same industry, you may watch them side by side today along with the market ETFs. So you might put them on the fine-tuned chart along with the market ETFs. I use multiple monitors. So one monitor, I'll have the market ETFs. Other, I'll put FIFO and HAE. And then on fine-tuned chart, I may see which one is giving a lower risk and more bullish signal. That way, I may try to take a long position. I found some other stocks also for buying. That is, let me explain how I found it. I explained how I found OPK, that was from Vital, using the universe low price stocks. Then I looked at the star candidates. I explained Vivo. Vivo was also in that list probably. Yes, Vivo is also a star candidate, low price stocks. And then another stock I found using Q Insight. This time I used Q Edge. I'm using the development version of Q Edge. Therefore, there is no Insight tab. The Insight buttons are here on the stock tab. And as I explained earlier, that is very useful because now I don't have to look at only the top 10. I can look at more number of stocks provided the percentage change is high. So I looked at, I think, let's see how I found. If I look for value stocks, then I found this one, TWI. It is undervalued. Undervalued with a short squeeze potential. Yesterday went up by 4.4%. Let me close and then click the chart icon to open it from Q Edge. This may not be my style of stock, however, it is nicely going up above the yellow direction line, regained the white direction line, and just yesterday broke above the memory resistance. Titan International, TWI. Not my style, but it is a possible breakout candidate. And if you look at it using weekly, daily, the weekly is also nicely going up, solidly outperforming the market. And I think the industry was also strong. Let's check that out. TWI. Let's go to Q Vital first. Q Vital. Where is TWI? TWI.m. Agricultural and farm machinery. Now, interestingly, you will see sometimes different groups like Standard and Poor's, Morgan Stanley, Thomson Reuters may tell a company's industry is different. So in this case, TWI is in agricultural and farm machinery and also auto trucks and motorcycle parts. You could say it is in both. So which one will you use? You may then write, not write, we cannot write. We can read the business description. We can write, but we cannot alter the business description. We can read it and it looked like it is more appropriate to evaluate it using agricultural and farm machinery. So let's look at that industry. Very strong. This is one stock I found that is in one of the strongest industries, and the stock is also strong and breaking out. One more stock, the last one. That is also in a strong industry. So I found several buying opportunities, some in defensive sector, Vivo, OPK, HAE, all in healthcare sector, TWI, agricultural industry, agricultural equipment, and this is in, I think, apparel retail, DLA. Yes, apparel, accessory, luxury goods, apparel, accessory. When the industries are same or similar, you don't have to worry about which industry to check. In this case, we can check any one. Let's check out the industry. And here also, I found the industry was very strong, very strong. Let's look at the stock. While it is opening, let's look at the chart, DLA. Not DK, sorry, DLA. Strong again, isn't it? Weekly has excellent support. Daily has excellent support from memory line. Daily gave a bullish flow candle, very bullish shape yesterday, though the market was down. The weekly doesn't have a cyan color candle. It was consolidating for several weeks. Now it seems ready to go up. Stop loss is narrow. Relative performance is strong. Technically, it is giving a buy at support kind of setup. If you look at the weekly, you may also consider it as a strong stock in consolidation that gave a bullish flow at support. Industry was strong and fundamentals also quite good. Great valuation. Earnings growth is negative, that is fine. We may buy a stock because of either valuation or growth, in this case valuation. And okay, I think this data, it has not retrieved the stocks. Let me refresh again. The industry was strong. We could check from Q Edge also. Yesterday, though the market was down, many stocks in this industry were actually up. That will be reflected in Q Vital also. If it cooperates with me little bit. Sometimes my system is slow, maybe the internet is slow. In any case, the market, let's look at the E-mini futures one more time, ESC1, S&P 500 futures. It is still up 30 points, up by more than 30 points. Therefore, if I have a good entry opportunity, I may buy some more stocks today. Yesterday I bought 3. Today I may buy some more. And if Q Vital has finished calculation, no, that's fine. That is, oh, okay. So it has finished calculation. Yesterday, though the market was down, 71% of the stocks in this industry were up. That is a bullish sign. This may be a buy candidate today. There are some interesting changes in the latest version, still work in progress. Remember, I mentioned about the possible differences in industry. Let me show an example. MMYT.O, make my trip. It can be treated as internet and direct marketing retail or leisure and recreation industry. If we read the business description, it fits more with leisure and recreation, not internet and direct marketing retail. It's also based on internet, but this is important distinction. These two are very different. When you look for industry strength, which one do you look for? Use the industry or alternate industry? So I made a very significant change in Q edge, and that had to be accommodated in Q Vital, Q index also. Let me explain. If I am looking up this stocks industry using Q edge, using the cog icon, now Q edge is having to work twice the hard, twice the amount. Now I can see the industry and also in alternate industry. I can see industry percentage, also alternate industry percentage move. I can see sector, alternate sector, sector percentage, alternate sector percentage. For sector, I prefer to use the primary sector because that has more granularity, 11 sectors. Sector 2 has 10 sectors. There is no real estate. Similarly, for industries also, I prefer to use primary industry that is more granular. It has 147 total industries for USA market, dynamically calculated. If USA has stocks in new industries tomorrow, this will automatically go up. We don't have to make any change. Everything is real time, everything is dynamically calculated. I prefer to use industry, not the alternate industry, because it is not so granular. However, sometimes when the description matches the alternate industry more, then instead of looking at primary industry and thinking that it is weak, though it improved little bit yesterday, prior to that, it was very weak for several days. I think instead of using internet and direct market retail for make my trip, we may look at industry 2. That is the alternate industry, leisure recreation, and this is much stronger. Yesterday it declined little bit, but this period was much more stronger than the primary industry. That is a significant change I made. Now Q edge is having to work twice the amount. Let me give you one more example before closing today. If we look at the solar companies, FSLR, it can be considered a semiconductors company or a renewable energy. But if we know the company, if we read the description, we know renewable energy may be more appropriate. Therefore, when I look at the industry, now when I look up industry using the cog icon, it is going to show me both the primary industry in the industry tab. That is very weak. Semiconductors very weak now. And didn't I have a great profit in several several semiconductor instruments? SO, XX, the ETF, and I also shared MXL earlier. It's a short opportunity semiconductor. That also gave me large profit. Semiconductors is weak, but if you look at renewable energy, that is not so weak. It was very strong. It weakened in the middle, but yesterday it was strong again. That is a very large change I made. The entire engine had to be changed for that. I'm testing it out. Therefore, along with this inside buttons being in stock tab, there are several other things here also. And the other big change is now we can look up not only the primary industry, but also the secondary industry. It's not released yet, it will be released soon. And because that change is there, now in Q Vital, instead of looking at industry plus or industry, we could also look for peers in alternate industry. So if I change it to industry 2 in peer relationship, now it is not going to look for semiconductor peers, it's going to look for renewable energy equipment and services peers. Let's give it a few seconds. Very interesting change, and you will be able to make even more powerful informed decisions based on this ability to look up stocks based on not only primary industry but also secondary industry in Q Vital as well as in Q Edge. In fact, in Q Edge, I want to show again. If I refresh the data, the primary industry count is more, 147. If you go to secondary industry, it is 119. That is why I mentioned I prefer to use primary industry. Same for sector. Primary sector count is 11. It has real estate. Secondary sector, primary sector is 11. Secondary sector doesn't have real estate. Real estate companies are merged with financials. So I prefer to use the primary sector, primary industry, but sometimes you may also go to secondary industry and look at the strongest ones. Which ones are the strongest one? We can see auto, textile, airline, apparel, accessory, footwear, home building, tobacco, etc. Now let's go to industry. Again, find the strongest, look at the top one. Auto again, laser again, motorcycle, apparel, airlines. Many of them are common. You may focus on the common ones. That may be something you may do, but to simplify, you may just use the industry, not the alternate industry. Use the alternate industry only when, like in case of Fast Solar, you see the primary industry is not really describing the company properly. In that case, when looking up QH industry score, you may look up the alternate industry score. And in this case, now QVital collected all the peers, and if you go to the stock score, you will see this another thing I added the alternate industry. You see all of them are renewable energy. And if I sort it, several of them went up. However, the valuations are not good. One has good earnings growth. When we saw that, let's check it out, VSLR, before ending today's session. VSLR. It's always fun to play around with the systems, different Q systems, and see if we have a buy setup. Okay, I have to link them and change the template. Change the stock again, VSLR. We saw it is already undervalued. Sorry, no, already overvalued because the stock has gone up. This is not the point I want to buy it. There is no buy setup using Q technique. In any case, Now we are able to look at stocks using primary industry as well as secondary industry. Primary industry is preferred unless the secondary industry, alternative industry, describes the stock better. I'll try to release the new versions maybe in 1 or 2 more weeks. Let me do some more testing. I'll also take some tutorials to explain all the changes in detail, and I'll record it and keep it on YouTube. Already at 1 hour point. That's all for today's session. Thanks a lot for attending. I look forward to seeing you in our next session. Have a great day. Keep safe and trade profitably. Thank you.